In today's video, we are going to talk about AI, trading, raw knowledge, and how that affects traders and how it may affect you. It's a very important video to listen to because it will give you probably a lot of ideas and maybe make you rethink what you're doing or just agree that you're already doing what I'm going to show you. And that's great, because then you don't have to change much. I don't say this is the right thing to do. I just say this is a way I do it, and it's been working really well for me. So you can take it with you, use the information that you find interesting, and anything else just ditch, right? So this is Anthropic. This is the app that you can download. Looks pretty much the same in a web browser. Anthropic has an AI called Claude. Claude AI is a very good expert advisor, I was almost going to say. It's not an expert advisor, it's an AI. It's very good at coding expert advisors, PineScript for TradingView and so on, other languages, with almost no error. It's excellent. And what you see now is their new Fable 5. It's the latest AI they have. See it there. Opus 4.8 was the previous one. It's good, more than good enough. Sonnet even fine to use. Then I wouldn't go lower. And the thing is, when you are doing scripts and you find that it not listening, not doing the way you is thinking, go one step higher. For every step you go, the more expensive it becomes. And you can have a monthly subscription, and then it's limited to how many prompts you can and how many replies you can do during a session, daily and weekly and so on. And here is the thing. We need to do this in a smart way so we save our credits. Because remember, you're paying a fee, and then you're paying a fee for prompting that is taken from your budget that you already paid. So you're not paying it twice, but you think like that because it's money that you invested into this product, and now they're going to take off part of that budget every time you talk to an AI, right? So what we need to think about when we're doing prompting is when you type something into this box and send it. The first post should be the post with most text and instructions. Skip the hello, thanks, and so on, right? If you don't want to, of course. This is a computer, a supercomputer, but you're here to get results. You're not here to be nice, right? You don't have to be rude, but you don't have to be super nice. You can like every work you do. You will get like a thumbs up or so on, right? And you can even put in a comment to say why it was good and so on. So the company know that their AI is producing the type of results that you are looking for, right? So what you do here now is you, for example, let's say we're going to build an indicator. Then we want to implement everything. It's like from the beginning, you talk to someone that knows nothing about you and your trading methods and so on. So let's say you are trading gold, for example. Are you trading the GC, the futures? Are you trading the CFD, XAU, US dollar, and so on? Do the EA need to know which feed it should listen to? Or it doesn't matter maybe? If it doesn't matter, you don't need to implement it. Is it a specific time frame? Is it a specific session, time of the day? Do you want to have that session shadowed? Do you want to have some borders, some break line when it starts, when it ends? Do you want to have news on chart or whatever it is, right? Do you want to have arrows? Do you want to have pointers? Do you want to have text boxes? Do you want to have this and that? How the badges should look like? Should it be like X ADR from each candle, for example? Many times that looks really nice when you do it that way. And you can ask the AI, how can I get these badges away from my calendar because they are in the middle of the calendar right now. And the by badge is actually pointing in the wrong direction. Can you turn it around and so on when you come a little bit into this progress? Then what you need to do is explain every step. Step 1 is like you opening up a chart every day. What is the first thing you do? Write it down. Because if you have it written down, then you can also explain it for the AI. If I open up a goal chart and I'm looking for my so-called dead box, right? My dead box starts at one time, end at one time, has a 50% line in the middle. How can I make sure that the AI see what I see, so he can understand, or it can understand how it should code it? Be very, very detailed in the beginning. It will remember everything that you do. And next time, let's say you do your script 10, then all of a sudden you will see it's adding features in settings and so on that they know from your personality that this is what you want every time. So in the beginning, it's like building a new house, right? You have to explain everything. You want a floor, you want walls, you want a roof, you want yellow paint, and you don't want milk as paint. Remember that from my previous video. Right? So the first post should be the longest post with information on what it is, what language, PineScript. You can just type in the latest PineScript version or the latest MQL version and so on. If you have a specific build of your MetaTrader, put that in. The more information it has, the better it will become. All right? So long post, don't small post asking questions. Don't ask expect. Expect AI, it can do everything for you. If it can't, then you will be noticed about that for sure. Right? So that's how you can do it. You can also speak to it, and you can type in any language. It can read any language. I always type in English. I don't know why, because it can understand Swedish perfectly. But I do that because I'm so used to it. So I do that, right? Because I have a better flow in the English language when I'm explaining things in trading. So that's why I do that. So that's the thing I want to talk with you. That's so you can get started with AI, start building your scripts, indicators, whatever it is, and don't expect it to be good. Version number 1. I say that to other people doing AI. If you don't have at least 20 different versions when it's done, you probably didn't do a good job, because the AI may do it the way you explained it, and the way you explained it is not how you do it. So it's a good exercise for both of you, basically, because you see what we think. What you have in your head for your system, and when you do a video explaining it, or if you write it down, it will be very different things, because it will never be exactly like you have in your head in the beginning. And then when you balance that up with each other, it becomes better and better. And the better friend you become with your AI, the easier it will become, because next time you do a script, and it will probably start asking you, do you want this that we did in this project, or do you want this? Or sometimes it will just add it, and then you can say, hey, can you remote this? I don't want to have like a flower in my settings and so on, right? Because that was another project. So be specific, but at the same time, be very straight with what you want and what you don't want. And anytime you're going to use an indicator and so on, make sure that you give it the full code. Doesn't matter if it's a moving average, MACD, or whatever. Take the PineScript code from PineScript, paste it in. Remember, the AI knows a lot of things, but it also thinks it knows a lot of things. And that is the danger with coding with AI. Because you want to make sure that if you use a MACD, for example, you want to have the exact code that you have in your MACD on TradingView, and how can the how can the AI even know what code it is? Because there may be different versions. I can take a good example about that. I'm using half trend a lot from Everget, but there are many half trends out there. So the first project I did, I would say add half trend with these settings. It did that, and say, but it doesn't look like my indicator. And then we ended up with like 10 hours of fixing and patching and so on. And if I just had provided the code from the beginning, it had used that version. That was an expensive lesson, but I learned from it, right? So now I try to give it to you so you don't have to do that mistake. So AI, start using it, because you want to build, if you can't code yourself, of course, then that's great, but you're never going to beat AI anyway in speed, because this one codes like a master. So, but it's good, of course, if you can read code and understand it, but beating Claude AI in coding, not many people can, because it's super fast, super intelligent, knows every syntax, and can write cleaner, better code than most humans. So use it in a good way. So now we are on the chart, a view that you're probably very familiar with. This is the indicator made by Claude. It has several systems in one. That's why I'm not going to give it to anyone, because I have sitting here for like, I don't know, 20, 40 hours doing changes, fixes, and so on until I understand it myself, or until I do what I actually want to do. So for a untrained eye, I say, well, it looks great. Take profit, take profit, take profit, take profit. Great one. I want this one. It's 100%, right? But that's not what we should be looking at, because this is past history. It doesn't help anyone. It could be for losses as well. We don't know. But what I'm going to talk with you about right now is raw knowledge. Thank you. I know that. Let's say there was no indicators. There was no candlesticks. All you had was levels. You start from the very basics here. Okay? So let us go to today's trade. It's ongoing, but I just want to show you. Okay. So all you don't know about intervals. This is 15-minute chart futures from COMEX, right? This is XAU US dollar, but the GC means gold in futures, right? You know nothing more than this level. So you get like a document, say, okay, we have been 42.45 and we have been 41.84. Okay, that's all you get for today. Can you be trading it? Probably not in the beginning, because you don't understand raw knowledge. It doesn't matter what time it is. It doesn't matter what candlesticks it is. It doesn't matter how they look like. It doesn't matter how many indicators we add. We can do like this. It's easier now. You only see candlesticks like this. Okay, let's start here. Each asset has a zone where it will go up, down, up, down, up, down. Consolidation or contraction or anything, noise, whatever we call it. What I like to do when I do indicators like with this one, simply because it's adding badges in the middle of the candle. I'm not done with this indicator, but it's working as it should for now, but there are some small fixes. What I like to do is go up to here, use hollow candles. You see there, hollow candles, this. And what I like to do, I like to click on the candles, go to body on the bearish one, and remove the inside body of it. This. So they really get hollow like this. And the reason we're doing that is when we're adding the indicator, is now I can see the take profit one. I can see what this one says and so on. But I already know from the colors what these are, because I've seen that so many times. So I don't really need that. But it makes it easier to watch a chart. Okay, so the next thing is, doesn't matter what you trade. Doesn't matter what asset it is. All assets has their own dead zones, boxes, consolidations, contractions, and so on. What I've done, I've taken data from, I don't know, their Excel after Excel after Excel after Excel, telling me when the gold market is moving up and down, up and down, up and down most of the time. It can trend, of course, but I mean, we can take this chart and say, oh, here's a consolidation zone, and here's a consolidation zone, and here's a consolidation zone, and potentially here's a consolidation zone. Yes, it is today, but tomorrow it may be largely different, right? So what you want to find is, you want to find when the markets go in the up and downs, and when do we do breakouts, do the setups, and do the big moves, because the trend is your friend, right? So basically what I've done here, if I add this box, and you will see I set this one to UTC. Whoops. The UTC, that's same as GMT. It never changes. Same every day, 365 days a year. Right? You can change this to any other time. The hours down here will only change. So again, it's just numbers. So this box here, it goes from 3 a.m. to 10 a.m. GMT. If I was changing this one to my local time, which is +2, I don't need to take, I can take Stockholm there, right? Now you see it says 5 a.m. to 12. If we go by New York, whoops. If we go by New York, I think we can take exchange. Yeah, -4 GMT. It's 4 hours behind GMT. So when there are midnight GMT, that's 8 p.m. New York, right? Let's see what it says New York time. It says 11 p.m. or 2300 for 24-hour watches, right? 11 p.m. to 6 a.m., right? And that would be easier if you live in the US. But for me, it will be easier if I do it in my local time. This, right? So we're going to use that. So I know between 5 and 12, my time, Central European time, that's the zone I identified on gold to be a dead zone. That doesn't mean it can start earlier, like 1 hour, or later 1 hour. It can. But based on statistics, there are apparently been breakouts just here, or something happened just here, right? From the previous day. So I found this box to be the dead box or the consolidation box. This will happen first. This is my step number 1. And you see I also added a 50% line in the middle like this. These are just numbers. It's a level high or level low. Doesn't matter what asset it is, and it doesn't matter how the candlestick looks like, because I can do, if I want, I can go to this one, line chart. Doesn't matter, right? But the thing is, when you do candles, you get the high, low, and close. Whoops, that was hiking this one, right? So remember now, this is your high and low. And now we come to raw knowledge. This could be a Bollinger Band, MACD, RSI, any moving average you like. Can find this high and find this low. Sometimes. So when you as a raw knowledge trader look at the high and the low inside this box. There may be RSI trader, MACD traders, moving average traders that look at something else. They don't even have the box, but they know it's going to the high of EMA 65, for example, or it may go RSI, or it may go MACD, specific value, specific pattern. We look at the same thing. It's the price, right? But if you don't have any indicators, like I said, then you only have price. And if you understand this box, this is step number 1. Every day, same thing. So for me, I can do anything until at least lunchtime here in Europe. Because I know if I do that, I will be in trouble. I don't want to be in trouble. I want to follow my rule-based system by the numbers. So this box can be many things, but for now it's a box of high and low price between X and Y. Right? That's you should think like that when you talk about raw knowledge. That's your raw knowledge. You know, you have a box, you have a time-based box. This has to happen before you do anything. So this was your step number 1, right? And this 50 here is not so important for my trading, but I want to know where the 50% of my box is, because think this as the value line of the box. Price can go above and below, but where do most volume sits? 50%. Otherwise it wouldn't be 50%, right? But that doesn't help me, really. It's just an indication that if this matches with this one, it's a very strong level. And I'm going to show you why. So when we have reached this box here, we see that it wicks out of this box. And then I have an information box there. You can actually use 5 different time frames if you want to. I just set it to 50 now, not to confuse more than needed, right? It said armed short. It did that on this candle's close. Armed short. Okay? So now you know, okay? For now, this is a short position. But when, how, and why? Right? So what you want to see now, you want to mark this with a line here. And you want to wait for one candle, at least one candle, that does not touch this line. Can you see which candle that is? If I move this 1 to here. You see that all candles were either above it or had a wick or a body crossing this line until we come to this candle. This is the first time I can say this has a potential to follow my rule-based system. Because if it doesn't do this, we're coming to how we trade them, because you can trade them still. When it just wicks down here, it has a 80 to 90% probability to fool you into sell, but it actually buy. So this is like a seatbelt for you. Put the line here, check the first free candle. If that exists, then we can move on. And what are we moving on to? What this is doing, or it's actually not doing it right now because it's only taking the first low. But anyway, what this is doing, or what you should be doing here, is measuring the high of the box, since we broke on the downside. Let me take off this thing, so we don't need it. This. Or 50 we may need. There. This one we don't need. Okay. This. Okay. This is original Fibonacci. It doesn't look that good. You can remove all the background colors and so on. Not becomes less messy. Right. So what we've done here is from the breakout of this one, we follow that with Fibonacci. Every time we make a lower like this, we say, hey, Fibonacci is an indicator, right? Yeah, it is. But what do Fibonacci do? It measures price levels, percentage from each level. 10, 20, 30, 40, 50, 60, 80, 70, 80. It can be Fibonacci. It can be a Gann box. It can be a moving average. It can be a MACD. It can be an RSI and so on. And now again, we end up in this indicator hell. The same thing you can apply with raw knowledge, right? You may be thinking that, okay, if this is 100%, how much does this box normally move to the downside or to the upside before it retraces, before my setup comes? Write it down. This, what you see here, is not based on me sitting and talking to Claude AI, say, well, let's try this one. It's based on stats. I couldn't know that these hours was the boring session, because it's actually, I mean, it's we have GMT now, right? Around here you have London. Good session if you have a system for it, right? But for me, gold is always doing this. It's going up and down in this session. So for me, this box was important to have. Don't do anything until the box is over. Wait for a break on the downside, wait for a break on the upside. And then we can start working. And we drag from A to B to B to B. And we do that as long as we want, as long as we need. And it's all numbers. It's all number levels, or number level back into if this is now 100%, then each section here has a number, right? Not the price of gold, because this could be Nasdaq, this could be Euro US dollar, pound dollar, whatever. And you will find this to be very simple to think like that, because that's raw knowledge. If you have too many indicators, they may say same thing, or they may be mixed, and you may end up being in like, what should I do? What is right? What is wrong? There is no right, there is no wrong. It's what you close at the end of a trend or a trade will matter, right? And try then to make it as simple as possible. So what we did here, we just followed this one down. And one for gold, one crucial level for gold is equilibrium 50% level. Let me put this one here. This one here. I couldn't know that this was a strike level because we wouldn't get 50 if we were dragging this low, right? But when we're down here, we know this is a strike level. This is where price has most volume all over the chart. So when I know my 50 line, this purple line is supposed to be here, but I have to fix that because I changed the algos a little bit since yesterday. But you see, where are they matching? They're matching there. See that? How this one and this one match, and that's because that was the first break low. That's what the indicator reads. But what I wanted to do, which it will do shortly, based on what I do in my trading, I wanted to follow the lowest price until it do the next step. If this was step number 1, breakout step number 2, remember when you explained it for the AI, this is step number 2, and not until we do anything of interest. Let me do it like this, and let me change this one. Take away, we don't need the trend line for sure. Remove that one. We don't need background like this. Cleaner like this, okay? So all you do as a trader is sit here and wait, okay? We got a break here. See where the 50 red line is, right? We go here. Has it reached 50 yet? No, it hasn't. There's 50. Okay. So should you trade every time it reaches 50? No. It doesn't work that way. The reason we have 50 is because now we are going to do something else. Remember this 50 line, right? I'm going to plot it out because I'm going to take away the indicator. And I don't want Fibonacci. There's my 50 line, okay? Remember that one. We hide the indicator. We remove Fibonacci. Less is more. The less information you have on chart, the better it is, right? This, okay. So if this is my 50, let's put a line there. This is my 50. There's something in the market. You see when the candles move like this, they have balance because the wicks are touching each other and the bodies are touching each other. They are in balance. When they are not, they are imbalanced. Price moves too fast away from a specific level, like here. You see how this one, that was the low, right? And this one should have a matching candle here. It didn't have that, okay? So it may just be a longer candle, which is fine. But then all of a sudden, there comes a third candle. This is also what I call a contraction setup, but we don't have to go through that. And what you see here is that between this candle 1 and candle number 3, there is an imbalance here. Price should normally touch each other all the way here. See how they do that? But not here. So when you had the box, you had the breakout, you had the ABC 50%, and now we come to the 50% line that I put here. See when we are on this line? What we're doing now is looking, where do we have an imbalance above the line or below the line? Below the line, we don't have one, right? It's nothing here. See how the wicks is covering up for each other and bodies here. But this one is from here. This is what most people do when they do imbalances like this. I like to use the middle body candle like this and this. This is the zone for me to be interested into. Why? Because at 50%, I try to find the largest candle with the largest gap. That's a 5-star information session for me. Okay? And when you have that, we can remove that box. We can remove this one because you already know this is 50% from the bottom before it went up. If this is the imbalance that was not filled because sellers was aggressive here, buyers didn't catch up really. They went up a little bit higher. This could actually be your trigger candle, but yeah, I'll show you what's happening here. So if this is around 50%, the biggest, see, this is the biggest candle, no doubt about that one, and also it's the biggest gap or imbalance, because it does not exist on this. So this is just consolidations, right? So we can expect between here and here, market should come back to and do something of interest. And what market do here, it went down, and then come CPI news. Does that matter? No. It's just numbers. It's raw knowledge. When you were sitting here, say, today is not going to go up here because this and that, right? And you enter here and get stopped out. Guess what happened to me today? I was thinking, well, we're just going to traveling down here. Just because I know what to do doesn't mean I always do that. We all do mistakes, right? Look what this wick ends. It's not always it's perfect, but many times it is. And the many times is where you should trade. See how it went to the open of this candle, this body here. Normally 50% or just wicking from bottom, just one tick higher here. See how I do it there? You could be entering sell on this one, right? And your stop loss is one candle above this one, meaning this one. So your stop would be here. So if you were entering here, your stop loss is there. That's all the risk you take. Win or loss, doesn't matter. Because you are doing the numeric system based on raw knowledge. That's all you do, right? Okay. Went down, come back up, fill the full candle body here, the full sell candle. Buyers took it out before the real drop. So again, let's take it one more time. The box, the breakout sell, follow with Fibonacci or any 50% or your eyes, doesn't really matter because you know where halfway is on this one pretty much. And especially if you take the second advice is to find the imbalance, that the largest candle, largest gap, that zone together with the Fibonacci 50% equilibrium, if they match, then it's a high probability that that will be a very good entry for you. It already said that you should be selling. That, I mean, market is like, yeah, I'm not going to use the words, but it's lying all the time to make sure that you do the wrong things, right? But if you have different checkpoints here, checkpoint box 1, checkpoint 2, break 2, checkpoint 3, come back to filling the gap, and 50%, you have 3 and 4 there, right? Okay, so if your system check all these boxes, the trades you take after this will have an edge. When we are here, you can just shoot right up, of course, and you will be stopped out here. But the days when they do not do that pay you much better, because this little size from here down to here or there, that's what it's called 1R, right? One risk. How many of these did we do downside? Much more, right? And when you are here and entering, your goal is to go back to where price has been today. Where did the breakout went lowest? That's where you should exit. You can exit like the spread and 1 tick or 1 cent higher, right? So you actually hit the right number. Otherwise, you need the price plus the spread, and then you are in the price area where it has not been yet. Unless you know this, of course, but you don't know that when you're here, right? That's your first target, but that should not be your end target. What you should be doing when price closes down here or reaches this level is moving your stop to break even from this position to this position and take out 30, 40, 50, 60, 70 of your position here. Because now you have a free position that can't hurt you. It can go to stop loss. Well, then you lost whatever you had in the market, but you didn't lose anything. Okay? So always stay in markets that is moving in your direction. You have already closed, let's say close 50% of your lot size here. And now you say all this noise here. Don't look at it. Leave the order until the market closes today or 10 minutes before it closes. Then you can go in and close it so you don't need to pay swaps and stuff like that. Or if you want to hold it overnight because you think it's going to go much deeper, you can do that. There will be a new trade tomorrow most likely, right? That's why it says TP here, because it went to this level. And I can set this to go to the breakout low or R. If I want to have 10R, I can set 10R, right? Won't happen every day. But if I want to have that, if I have an asset that normally do 5 hours average on these trade setups, then you set 5R because that's the most common. Remember, this is only numbers that you should add to your trading platform and see win, loss, win, loss, win, loss, win, loss. Same risk, but the reward can be very different. So if this is your 1% risk or 0.5% risk, you may make 1% down here, or you may make more, of course, but when you come down here, this should be your ultimate target, because then you always know that you're getting more than 1, right? But then you can get a lot more. We don't know how far this one will go down. But if I can't risk anything, if I can't lose anything of the remaining lot size, why should you exit the market? If you can explain that to me, I listen. Or you can take 90% here if you feel that, well, most of the time it will go up and take out my stop anyway. Take 90, but leave the 10% in the market, because they do 10%. When it says done that 9 times on the downside, it starts paying more than your original closed position. And that's what professional traders do to survive in these markets. There are no other way around it. Stay in when the market do the things you want it to do. Let's say you're out running. You're running and it feels really good. The sun is shining and so on. All of a sudden, let's say, nope, I'm going to stop because I feel good and the weather is great, but I'm going to stop here because even though you need to exercise at least 5 kilometers more. So I stop here. Or you go to a day job and it's a great day. You have the morning coffee and everything is fine. So around 10 o'clock, say, well, you know, it's a super good day. Everything is running and I have a lot more to do. But you know what? 10 a.m. is the time I'm going home today. And probably people will be very upset because they know you're working to 5 p.m. or whatever it is. You don't do that in life, right? And this is not about feeling good or not. This is by doing the job or not. If you are leaving someone that is handing you $100 bills, say, no, I don't want more money. Stop it. I don't want more money because I'm done. Because someone told me to, I don't want more than $1,000. It's good. I don't want it, right? We don't work that way. So why should you be doing that as a trader? That's the raw knowledge. And what I showed you today is one of the simplest, easiest trade systems. But the problem is, it's much easier to enter much earlier, take profit much earlier, close everything here, because then it's at least safe. Because you don't have a rule-based system based on numbers, right? But if you do it like the box, the break, the filling of imbalance, or at least 50%, take out what you already done today. Most commonly it will go there, but today it went more. And every time markets reverse like this, don't think, will it reverse? Will it go up again? Yeah, that's exactly what they want you to think. The other people that are buying, they're trying to make sure taking out sellers, of course. And sellers are trying to take out buyers. That's the game. But the better prepared you are with a system like this, the better you will do in the markets. So I showed you the easy way. When you do it in one direction, perfect trade, can't get much better than this. To take profit, just continue. If every trade was like that, I wouldn't be sitting here, right? We wouldn't have educations, webinars, teachings and so on, because you don't need that, because you already know every day it will do this and you will be millionaire in no time. So what I'm going to show you now is the Gold's infamous daily moves. Remember, we had the box, same thing like here, right? We had the box. What should it do with the box? A free candle that doesn't touch the box. Can you see the free candle? No, because it never happened. It went up, it went down, right? And then says flip. Flip means because it went up, we will be looking for an imbalance here, or 50%, to enter long. But what market did, it took out the lower box. It already took out the upper box, now the lower box. So the market was flipped. And this is where you as a trader can sit and say, well, I decided to buy, I'm going to buy. Because you're going to be hurt a lot. This is not a relationship. This is war. And the one with the best equipment, the best shield, and the best action wins this game. There is no way around it. But what I'm going to show you now is when there are full force, when there are a fight going on in the market, this is the nice, slow, peaceful trading like we saw today. It's waving, coming back up, we can get in, we can get out, and so on. But when someone is screwing a lot of trades up here, see this long wick here, a lot of money was pushing long here. And then they took them down and say, well, we're not going to release you up here. Sit with your red numbers because, hey, your fault. You didn't have a system, right? Or you didn't have a protection or whatever it is. Now on the flip, and only on the flip, you put a line on the lower box. Any candle that closes below the box with the body, not wick, the body. See this one right here? How it is like a ½ centimeter below the box. When that one closes, remember we went from here down to here. No one is going to release them 9 out of 10 times. So what we are going to do now, when you have a line here, you have a box here, you will be selling on this price, and you can set your stop here. Tight stop, right? But this is where tight stops are good, because you're doing it for a reason. Setting tight stops just because tight stops feels better is not a good reason. That's something you read, seen, or heard of out there, but you not tested it. You don't have stats that tells you that that is exactly what you should be doing, right? If you put your stop here, what should be your target? Well, in this case, the indicator has it built in what to do. I'm not going to tell you what they do, because I want you to find out this yourself, what works for your market and your asset. And the only way you do that is looking at stats. You must start with your stats somewhere, right? What is the most common thing that happens on flips? What days are the most flipping days? And how does it respond to support, resistance, Fibonacci levels, and so on and so on? There's a lot of work to do. Same with the AI. In the beginning, there will be a long prompt. Then as you become friends with your market, with your trade system, you will know the exact numbers. It will not always work, but work most of the time. Imagine if you were sitting here and say, well, this is a buy for me because it went up first. Your account will be gone by now, right? And when you're doing this, you can, of course, apply other things to this, right? Like this one. This is called Head and Shoulders. It's actually not a quasi. It could have been, but it wasn't. Head and Shoulders, they are like 50-50. Add this to your analytics say, oh, well, it may actually go up to this one and sell, and it did. And if you put your stop here, you will be stopped out as well, meaning it's not a good pattern to use as standalone. But on this one, on the flip, always be ready to change side. A loss hurts, but when you're down here at the TP or lower, it was crazy mode down, right? How much of this feeling will you have left? Not much, right? That's because we want instant gratification. We want it to happen as we see it and now, right? Even yesterday would be even better, right? But we want it now. We can accept the fact that it's a minus, so we want it now. We want to profit, because we want to be like everyone else posting shorts out there, everyone else that is making gazillions of dollars, which they're not, right? But they show you only when it's going good for them, not when it's going bad, when the systems are messing up and so on. Because no one is interested into that, except experienced traders, professionals that want to see systems, why things happen. People that are very good at Dow Jones or Nasdaq, they want to see when it goes bad, not when it goes right, because everybody knows how it looks like when it goes right. That is raw knowledge. Study other people's systems, but ask them to show you when it goes bad, because that's what you are getting most information, knowledge from, not when it goes. Because if this was doing like went up here, went to the imbalance, went up to take profit, what did you learn? Nothing. You get a happy feeling, but you learn nothing. Absolutely nothing. Don't do that. Let's take a look at this day. Went up, right? Here we have the longest candle. Here we have the gap. There. You see that the indicator, or this one, it actually has another system that understands it, but this one doesn't. You see how it just wicked into this the next day, the next morning. And if you are like me trading futures, this is a massive gain. See how small drawdown you had, if you even had one. I didn't have one, right? Because it was spread and it was perfect trade. 4K was that trade. And it doesn't matter if it's 4K, $4, or 4 gazillion in that trade, because I followed the system. It made a box, it went up, it went into the imbalance, and it also bottom. When I'm up here, say, okay, where do my 50% line sets? I don't know if this works for every asset, but for gold is magic, right? 50 is here, the imbalance is here. They say, oh, hello, buddy, we are on the same level. Great. Then this is probably where I'm going to go next time. Okay, I say 50% here. But also, as soon as it wicks inside, you can take small positions down to the opening of this candle. Or one big here, or one big here. It's up to you. As long as you see this one here, say the stop loss should be the next candle. Yes, but not if they are equal. Then you must take the next one. And that's something you learn when you're doing your system, because you may not be a gold trader, which is totally fine. It's just my market, what I do, because I know it's in and out, right? Doesn't mean I win all the time, but I try to. Here we have really messy setups. What happens? We go buy, right? Because it's a break on the upside. Where is the free candle? No free candle. And don't switch time frames just to find a free candle, because then you are in a terrible state, because you are trying to forcing a setup, a view, a visual view that matches with you can click buy and sell. Don't do that. If you use 50 minutes only, or 5 minutes only, or 1 minute only, or 4 hour only, doesn't matter. Stay there. If your system can be useful for multi-time frames, fine. But if you have decided and have stats based on 50 minutes, and then you start looking at the 1 minute, on the 1 minute you will probably see a free candle here, but on 50 minutes you didn't, right? But this is not bad, because what this is telling you, okay, we cannot reach the free candle. What does this is a sign of? I said 9 out of 10 times, the flip is coming. And what happens? The box, our friend for the day, inside here, we don't care. Downside here, bad. Downside here, all right. Market tells me I should switch direction. Because if I hold for buy here, I will be destroyed. Especially if you are a futures trader. This would be maybe, too much money gone. You don't care about this one because it's in the middle of the value line. This candle here. See, it closes here. And what did we do with the flip candles? They are too fast. We can't follow any free candles. We can't expect any retracement and so on, because the war has started. There's a big fight. You wouldn't start doing something else than protecting your body and face this time. That's what you need to do here. So when you see this one closing, say, okay, I'm going to sell. And I'm setting my stop above this candle. The chances for it to go up much higher here, it happens, sure. But chances for it to happen is slim. It happens mostly only on the first move. The slow, think like you're dancing here. You're dancing with your lady here, or your man here, right? It's going slow and everything is nice and so on. Then all of a sudden, a thunderstorm comes into the market. If thunderstorms are not dancing slowly, they are crushing things. They are just going forward. They has no interest of if it's looking good and so on. They just want to crash your day, destroy your day, everything they can. And instead of trying to protect you from the thunderstorm, join the thunderstorm. And when this one has broken below the box, because remember, this is the dead box where they put in all the money during the day to be in the position to do this. All this money here, normally we say this like the sideways moment, even though this was not a super sideways. But if you take this sideways, that is pretty much from here, I would say, or there at least, to there, that's length down. It's very common. I don't say you should be using that as a target, because in this case, all you do now, when you see this, when you sell here, right? As soon as you had done, recovered your loss and done at least one candle here, or two, or three, it's your system, not my system. It's your system. I just show you raw knowledge what you should be doing. All right? What rules should you have? You can test one rule. If it doesn't seem to fit into your 200 trades, whatever it is, 50 trades, 25 trades, then do something else. And if it just keeps moving down, every time it breaks a consolidation like this, like here, move your stop above the consolidation until it stops you out in profit. Try to stay in there as well. Don't panic there. Well, now I recover my loss. Yeah, but you didn't make anything. You could just say, I'm not trading today because I'm going to get out when I'm break even on my account anyway. Why should you even trade then? Be aggressive when aggressiveness is in the market. Be calm when the calmness is in the market. Take this one. The box, the break. Okay, what do we have here? The biggest candle has a gap. Let's check. This is the bottom. Where did we went? We went to here. There's 50. Do we have any imbalance on the upside? No. Do we have one on the downside? Pretty much on the line, but it's more on the downside. Yes, we have. That's your focus. Okay? You set up your order when it wicks inside here and down to here. Stop loss is here, right? You get stopped out. Now instant gratification will hit you. You will not feel good because you have no experience of the stats into the system because you didn't write anything down. But if you have it written down and have your Excel or Google Sheet or a journaling system and so on, you will know this happens and it's not to worry about, because most likely it's going to do double the size minimum on the other side. And remember what I said, this one can be extremely hard to listen to, but you want it to close, below here, right? You don't want it to wick down. You want it to close or body down here. You never did that until here, but that's a new day. That's invalidated. But it did something else that you should see by now. That's why you should have different channels in your head. Be ready for any action in the market, because the market will not comfort you. It will either guide you or destroy you. Let us hide the buy for now, right? Say this is a sell flip. Say sell flip here, because it went. Now this is A to B. Okay. If this is A to B, this is the 50%. This is the imbalance. See that? Or maybe you don't see it because it's too much. This is the imbalance, 50%. We have an imbalance up here, but it's not near 50%. It can go there, of course, but this is more likely because it's 50% of this down range, and it's 50% of the measurement that we did now, and it's the biggest candle, it's the biggest gap. See, it's very simple rules. Every trade, same thing, same rules, never change it. And since we didn't break the box on the down, we just wicked it. But we did wick it. We have lost the buy setup. So when it comes up here, I enter again. But now for sell. And it was slow. This is easy in hindsight. It was slow like this. And when we come to, this was the end of session. And then you have to decide, okay, should I stay in? Because you obviously have a loss here. Should I stay in, or should I find a better trade tomorrow? Only you can decide that. On this trade, what do you think I did? Did I kept it, took all this? No. I closed it. Because you see, the next day paid a lot more anyway. Because that is raw knowledge. Your stats, your numbers in the market, if you know them, you never have to be sad, depressed, or feel bad because you lose a trade. But if you don't know anything of this, if you don't have the box, you don't have the numbers, you don't have the system, you have nothing, you're changing time frames, changing markets and so on, of course nothing will work. It's like you're running, you're going to run 5 kilometers. I'm back to running again, right? You're running 5 kilometers or 5,000 meters, all right? 5,000 meters, you're running 5,000 meters. And after 2,000 meters, you head back 1,000 meters, and then 2,000 meters forward, and then 3,000 meters backward, and then 4,000 meters forward. And all of a sudden, you have been running for 1-2 miles, but you should only be running 5,000 meters. How do you feel? Exhausted? You need water? You feel terrible because you are trained to do 5,000 meters, not 2 miles. Right? Same thing here. If you're trained to take this trade, say, I'm closing it before 2200, that's actually the US close in my local time, right? Say, okay, I run my 5,000 meters, but it was tough today. But well, I'm thirsty due to the loss here, so I'm going to stop. I may be running tomorrow again, and then a new day. Say, well, I know what I should be doing. I shouldn't be running or swimming with the sharks, right? So I wait for this box and say, well, now I'm going to out and swimming, running, whatever you're doing, right? Go do a day job, but working full time instead of 2 hours, right? Say, okay, what do the market tell me? No free candle. It flipped. I go in with a flip and boom, right? Many days it looks like this. And this is no magic indicator. This is magic knowledge, common knowledge. But most people don't follow it. They want to find the magic pill. Doesn't exist. See here, what do we do? Box, stayed inside of the box for a long time, went down, okay? Biggest candle, biggest gap. Most likely this was 50%, even though this one is a little off. Well, what did it do? Went up, filled the gap. Probably, I don't know if it's filled the actual open. No, it didn't. It did it here, but too late. But it filled 50% at least. Bottom, 50%. Or the wick inside, you can take 10, 20, 30, 40, 50, depending on how much you want to add at the same time. Same risk. This is the high of the candle beside the imbalance. You take next, where I would make sure that I cover all these wicks here. Okay? And then I'm looking for this one. Target. Or, not really target. Partial close. And more you stop to break even. And if you did that here, right? Let's say you enter here. Down here, say, well, I take partial, moving it to break even because I think it's going to drop. It didn't. Went up to get you stop. You made 50%, you lost nothing. That's the game. Other days it will look like this. When you do the same thing. So the better prepared you are into the market, and you have a plan for what happens if you do the slow dance or the thunderstorm when it's flipping the market, right? Thunderstorm. 2 good trading days because you take action when needed, right? Thunderstorm is the most common. Here was the slow dance again. So if you have a plan for how to dance, how to join the thunderstorm, not fight it, because you can't win over a thunderstorm anyway. Try and you will see, right? Now we come to the part that we haven't been talking about for a while. You're now going to explain this setup for your AI coder. If it's Claude, if it's anything else, try to explain the box, the break, the imbalance, the take profit, the flip, how it should work, how it should act, how it should take profit, when it should close a trade, and so on. That will be a couple of hours of work. But it may also be the only work you need to do to actually become a successful trader. This may not be your system exactly, but it can be the base that you build everything on from now on. Because this works excellent on gold. You may not be a gold trader. You may find other ways to do it on Euro, US dollar, Nasdaq, whatever. But it's the same thing. They will have their dead boxes. You may adjust the times, of course. It will do the breaks. It will do the fakes. It will do the flips. But as long as you are ready for the upside, buy. Oh no, it was a flip. Okay, I'm ready for a flip. I take a flip, right? And if it stops your flip, stop for the day. We never go more than 2 trades. It's not very common that that happens, unless there is a very, very tight box, and this is consolidation, testing up, testing down, testing up, testing down, and so on. But everything can happen and will happen. But the most common thing is that you actually make more gains than losses. And don't be afraid about losses, because losses are the way you can improve your system, find the metrics, why you need to change them a little bit, but don't change them over one trade. There must be a consistent reason why you're changing something. Otherwise, you'll be changing it every day, and that won't work, right? So I hope this long video, you may rewatch it, you may forward it, you may go back, and so on. Learn the system, the box, the break, the imbalance, 50% fib or GAN or 50%, the take profit, what take profit should you have, how should you act after loss, how should you act when you're winning, how should you stay in the market, which percentage should you keep after your partial take profit, should you move your stops even more when it moves even further, or should you just leave it? What does your stats tells you? Follow that. And I can guarantee you, if you do this, easy not to do, but if you do this, there is no market, no account out there that can't be profitable. If you can manage every situation in the market, not wins and losses, because that's the end product of a good or bad job. A loss is not a bad job, but it may be a job that is not following the rules or not have the knowledge in how to manage them. A win doesn't mean you did a good job. It can be something happened that hit your take profit and you didn't even know why. And how are you going to trade and know why next time? So basically, a win can be a bad trade. But in the public, you say, oh, well, I made this and that on that trade. But you don't know why. So how can you do it again? You can't, right? So win and loss, leave them for now, because they are just numbers. Follow the system. Build your own box system. This is just ABCD waves. You find them everywhere. In a better way to do it, especially for gold. Right? And then your hardest mission is to write all these steps down, how you want your system. And remember, this is not about perfection. You don't need to be right the first time you create your first script and so on. If that was the case, I would be gone by now. I've probably done 300-400 scripts since November. And most of them are just trash, right? But the few percentage that actually becomes something useful. For me, this indicator, I don't follow it when it says sell, when it says flip, when it says take profit. These are just markers for me to understand what was going on. I still may make mistakes, but then I at least can go back and say, well, how would I do this trade? Is there something I can identify? Like the super long wick, when that happens, is this a warning sign that they don't want to release the buyers up here? Because they're sitting with the stop losses probably below here, right? So when you're down here, they're gone. Their volume now pushed the market down. It's only one direction, and everybody joined the one direction, right? So go through this again. The box, the break, the imbalance, the entry, the exit, the partial, and then explain it for an AI or a friend. You can take any trading partner and say, well, I'm going to explain my system for you in 6-7 steps. And if they can get it, then probably a machine learning AI can get it. And you can get it. If you don't have someone to talk with, make a video like I do right now. I'm not talking to anyone yet until this video is published, right? But this video teaches me massively about my system. I'm going to watch it the same way you're doing. Listen to myself, say, why did I say that, but I don't do it this way? Because remember, again, what you have in your inside of your bone between your eyes, how you think and how you act inside without actually saying it or making a video about it or writing it down will be very different. And the videos, the logging, the practicing the right things, that makes at the end product will be stronger and stronger with higher and higher quality. So do that. It works. Like anything in life, the more you practice the right things, the better this end product will become. But if you practice the bad things over and over again, the worse it gets. So don't do that. Never paint your house with milk. Paint it with paint. Thank you.